Okay, welcome to the Swing Trading with Cycles channel. It's November 15th. We are going to do a review of Alibaba today. This is one of our single stock editions. We'll use price action on multiple time frames as we always do. And as always, the goal is to time the market without predicting it. This one has been going lower for quite a while. We topped out in 2020 actually. And so this is your annual chart. We'll start there as we always do. So each year, or excuse me, each candle here is an entire year of price action. So this gives you the big picture trend. And so this goes back to 2014 when we IPO'd, and this candle, of course, is 2022, our current candle, which is very red. And notice, the other thing to notice here is that we are below last year's low. So the year that's really important is 2020 when we made a higher high, and then the next year we made a lower low. So this year becomes a swing high. And a swing high is very simple to understand. A swing high is simply what happens when you make a lower low. And let me explain that. This candle here makes a lower low, meaning it goes below the low of the previous candle. Once that happens, this candle becomes a swing high. That's obviously bearish, right? In that same vein, this, for instance, is a swing low because this candle makes a higher high. Once this candle makes a higher high above this one, and really this one, this is a little bit complex, it makes this a swing low. Swing lows are bullish, swing highs are bearish. So, and also, the time frame it happens on is important. This is a yearly chart, so it's a really big picture signal, bad sign. And so that happened in 2021, right? So the low for this candle was 169.95, so let's just call it 170 even. In 2021, last year, we crossed below 170. Once we did that, again, that means we made a lower low. We made a low below the previous year's low, and that makes that year a swing high. The other really practical thing to think about there is any purchase, I should say, that was made in 2020, all of a sudden was underwater, right? Because if you're below the low from that year, then it means by definition, even if you got the absolute best price for that year, that purchase is now underwater because the price is lower than even the lowest price. That's important because it means people have to start making decisions, right? Am I going to sell so I can prevent further losses? For instance, like it starts to motivate you to do something. And then notice in 2022, we went below the low of 2021. So imagine you bought it here and you're like, okay, I'm in good shape because it's already went down a lot. Now you're definitely down even more, potentially. Charlie Munger is a perfect example. You heard him in the press. He was just kind of buying all the way down, and it was just kind of a little bit mind-boggling. That's the point of these videos also, is just to educate your average retail trader so that you have a better chance of making the right decisions. And you also try to mitigate the emotion, right? So that's the big pattern here. We're making lower lows and lower highs. These are lower highs, by the way, right? These are your lower lows, and that's your lower highs. And so if we zoom into the quarterly chart, that's our next time frame down. So we're going to work one time frame at a time. So we looked at our annual. Now this is our quarterly chart. What you'll notice is this was a very red candle that is now trying to go green. And how does a candle go from green to red? It has to go above the opening price. So let's just recap. The way a candle works, right? Once it goes below the opening price, it's red. If it's above the opening price, it's green. So if a candle is red, it means by definition it's below the opening price. If we can get enough of a rally, and you can see we have a huge rally, that's what this lower wick is. Anytime there's a lower wick, it means a rally is happening. And this is a quarterly chart, so it means there's a rally happening on the lower time frames. So this candle opened at 79.76. We're here at 79.21, so really only about 40-ish cents below. If and when we can cross above that level, that 79.76 level, that will make this candle go green, and we have the potential to turn this candle into a hammer. So the high for this candle for this quarter is 86.29. So if we can get back to 86.29, this candle will transform into a big, beautiful, bullish hammer. So we're going to watch the rest of the month and the rest of December as the quarterly candle closes. But this is a potential bottom, right? Again, another, to use more specific terminology per our conversation just from before, this is the potential for a swing low. How would we get a swing low? Well, we need to cross above this level, right? I just talked about the 86.29 level as a high from this candle. Well, if we were to cross over to 87, for instance, we would now leave this low behind. All these prices would be lower than the current price. That's bullish. That means we're moving higher. We're making higher highs. And then next move would be we want to see us holding higher lows. And from there, you could see a relatively swift move to 128, right? So that's a pretty good risk reward, right? You get above 87 and then you could have, easily another 40 points of upside. And if we zoom into the monthly, right, we're going to just work, down the time frames. On the monthly chart, we can see our month of November is nice and green. We still have a lot of trading days left in the month, so a lot can happen. But so far, it's an inside month. And what do I mean by that? I mean, it hasn't made a new high and it hasn't made a new low relative to the previous candle. You can see I just drew these lines. That helps you to clearly see the range of the previous candle. So a previous candle being October, this is a monthly chart. So the low was $58 and the high was $86.29, that same level we've been referencing, right? And so we're just consolidating inside this range, right? And so those become important levels to see if we're going to kind of break out here. And if we look at the weekly chart, right, you notice how these are all correlating. That's how it works. We have a weekly swing low in place. Actually, let me go back to the monthly. So if we were to go above 86.29, we'd have a monthly swing low in place, which we also talked about would be a quarterly swing low, which makes sense. You can't have a quarterly swing low without a monthly. That's the way it works. And we have a weekly swing low in place. That is from the week of October 24th, once we crossed above 69.80. So as long as we stay above that, we are in week 3 of a new, you could call it weekly cycle, right? This being week 1, this being week 2, this being week 3. So that's relatively early, yet at the same time, you can see these other little rallies got stamped out pretty quickly. So still a lot of wood to chop before you can feel kind of confident, but we are relatively early in a new rally. The other thing to point out is this line here, this blue line, is a 10-period moving average, so it's a 10-week moving average in this case. And as of this week, we're crossing above it. That's one of the criteria they talk about for cycles analysis. And definitely take a look at the link in the description where there's a lot of content I've created around that, a 101 to wrap your head around that. But that's an important concept in general, that at some point after a long decline, right? I mean, look at this decline, right? You're gonna, and we've had other periods where we crossed above the 10-period moving average. You can see they didn't end well, right? So we're not saying it's not the case that a bottom is definitely in place, but we know the levels, right? Crossing below 70 is our first kind of warning that weekly swing low is no longer in place. And maybe this little rally that has lasted 3 weeks is over, right? Maybe it's just a little 3-week rally and that's all we get. And if we look at the daily time frame, right? And hopefully you're starting to see this. As you zoom into each time frame, you get more and more actionable signals because that's, closer to the ground, if you will. So the same way we've been rallying for 3 weeks, we've been rallying this is trading day number 16, right? And so 2 things here. One, a rally of 16 days isn't super short, right? So it wouldn't be surprising to see a pullback. The other thing is we have this massive gap. Now, this is like really short-term price action we're talking here. Again, this is being recorded on November 15th. So this is November 15th where we kind of gapped up. Gaps usually get filled. Wow, this is about like a $3 to $4 gap here from 74 to 78, basically, actually. A little over 74 to a little under 78. So just under $4. Pretty big gap. Would not be surprised to see that thing get filled before another move higher, which means you could buy this thing closer to 74, which gives you a measure of support, like, kind of wait for it to pull back, maybe even get some kind of false breakdown, right? So like I'll draw that, something like this. So you can see this is the little uptrend that's in place. I'll draw it out. I'll draw this out. So this went there, and then we went that, then we did that. Now this was a little scary because that's a lower high. Then we did that, then we did that, then we did, well, technically like that, and then that, right? So this was definitely a little scary because that's a lower high, right? And then it's like, oh, are we going to make a lower low? We did not. Then we made a slight higher high of this, a little bit higher of this. And then this is almost like a little triple bottom here, and then up off to the races. Again, possibly get a pullback. And actually, let me draw that. I didn't show what the pullback might look like, right? Like you might expect something like that, maybe even cut below it, right? And then off to the races. So that could be an ideal kind of buy point. Now, that said, again, notice that you really want to see that monthly swing low come into shape, right? Like maybe you get a dip down and then a cascade higher above that $87 level, which again would give you a monthly swing low. That would also set you up for a quarterly swing low, and that means you're starting to make higher highs on higher and higher time frames. So that's the sort of lay of the land for Alibaba. And what I would call out, just kind of looking just really quickly, so this is the sort of MSCI China ETF, so broad exposure, whereas Alibaba is obviously a very specific sector within China. And if you look at this one, we've already made a monthly swing low, and I had drawn these lines a long time ago. I was looking at this thing. So last month, the high was 44.99, right? And we're sitting here at 45.33. So we have made a monthly swing low so far. And again, this could be your long-term bottom. I mean, we literally did we make a new all-time low? No, we didn't actually. So that's interesting, right? Like, so, because notice, this was a little lower high. This was a little rally that lasted 2 months. So we could be getting just basically a lower high. And the reason I call this out is because this is like broad exposure to China. And so you have to imagine there's going to be a correlation between what happens here and what happens with Baba. So would not be surprised. So all that to say, this is leading Baba in terms of being bullish now, but it also just narrowly avoided making a new all-time low, which, who knows, this could be setting up just a lower high for the final leg down. Because, wow, we got tantalizingly close. Doesn't mean we have to get there, but that will be interesting to watch. And how does this thing look on the quarterly? Right, so the quarterly, similar to Baba, right? Remember the Baba chart? The quarterly hadn't gone green yet. This has. You see this hammer? That's what Baba is trying to do. And I just mentioned, this is kind of front-running Baba in a way. It's kind of leading it. And this is a perfect illustration of that. So this is what we would expect the Baba quarterly chart to close out Q4 like, maybe. That's what it's trying to do, I should say. And then that sets you up for a quarterly swing low going into Q1 2023, which potentially sets your sort of long-term bottom. Again, there's no reason this thing has to collapse back down to lower. Like, it may just be, okay, that's all you're going to get, right? People got greedy and were like, okay, I'm going to wait for that all-time low. It just never gets there. But again, this will be a good sort of early warning signal in a way, because they're obviously super correlated. So that is the overview for Baba. As I said, this is a collection of different sort of single stocks. You can see there's going to be a link in the description to other single stock content, and also a thumbnail, or an option to click through to a thumbnail at the end of this video to see the playlist. I look at things like Amazon, Nvidia, AMD, Tesla, Meta, and there will be more added. Definitely, if there's any you can think of, add a link add a comment. Definitely open to feedback. And last thing I'll say is MCHI also has a gap here that probably is going to get filled, and a few gaps from previous days. So I'd be a little bit careful here, even though this is obviously looking more bullish than Baba. So that's the rundown. Thanks for watching.